Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro currency. Situation slowly but stubbornly is moving in the direction that we have discussed in our weekly research. So if we really will be correct, then probably today we could get some really fast action. This could be upside breakout here, but it's not really very simple situation, and we will return back to discussion of the possible patterns and possible levels that we should keep an eye on to clearly understand what is going on euro currency. But first, just a few moments on the New Zealand dollar briefly. If you remember, we have talked about the setup on the daily chart, and we said on the New Zealand dollar, and last week we also have discussed this situation. So you can see on the New Zealand dollar market hasn't quite complete this 1618 target, and we said that despite of this upward action, this market probably will drop first before we'll show any other action, before some maybe major reversal or something of that sort. And right now you can see that New Zealand dollar has dropped for this flag consolidation and starts dropping. So the target of this drop should be somewhere around 67.40. So 1618 extension of this ABC 1618D pattern. So this situation has started. You probably remember that in New Zealand dollar we have talked about this butterfly that has been formed right at the top of the harmonic swing, because here, guys, actually the harmonic swing market has formed the same retracement as here. And as you can see, this collapse has started, and just now the setup is developing. So right now let's take a look at back on the euro currency. So on the euro currency, we said that this action that we see right now is not quite rational for bearish market. And when you're dealing with the bearish market after such strong collapse through the neckline, you expect some downward continuation. Yes, we could accept this minor retracement because we have anticipated it and even have traded this setup, but we do not agree with this sudden stop here and returning back. So here, guys, actually we have what is Judd Napoli called as the oops pattern. I have explained this in detail in weekly research in a video on Monday, so I will not return back again to this explanation. But the major idea is that existing of the strong support right below the neckline could lead to the failure of the pattern. It doesn't mean that market will definitely start strong action in opposite direction and will reestablish bull trend, but it will erase the market mechanics of the hand shoulders pattern. So market will return back above the neckline. This return could be really significant. That's what we are watching for right now. And weekly research, we said that here the price action could be a bit different. So if we will take a look at the 4-hour time frame chart, we said that two patterns could be formed here. First pattern is some kind of the double bottom. Here we have also nice bullish divergence with the MACD. Or if market will start to show deep retracement here, this could be some kind of the head and shoulders. So this is left shoulder, head, and deep retracement back to this 1580 area, 1575 probably. It will be could become right shoulder, right? Market could then start upward action. But since our last discussion, take a look what we have. Here we have side by side multiple bullish grabbers are forming. So first of all, the first grabber has been formed right on the retracement that we have expected. I will show you a bit later, but on the weekend we said that probably minor retracement should happen, and you could try to take the position on this retracement. But as this retracement has taken the shape of the grabber, this is advantage for us. And indeed, right after retracement has been completed, market has jumped up again. New grabber again, and again. Usually when the market forms side by side multiple bullish grabbers, it will suggest fast upward action above these tops and that tops. What is more important, guys, that this situation with the grabbers leaves small chances for hand shoulders. Why? Because neckline is very important level, and a lot of traders, when the breakout through the neckline happens, they move stops closer to the neckline, because neckline is a well-known indicator of the validity of the hand shoulders. So if suddenly market returns back above the neckline, usually stops will be triggered, and this could lead to the fast acceleration up. The target of this pattern is, the distance between the bottom of the bottom to the neckline counted in direction of the breakout. This approximately stands around 118 area, somewhere this level. That's why if this breakout really will happen, hardly market will start to form some kind of the hand shoulders. The hand shoulders could start if market will just wash out of the stops slightly and then starts to deeper retracement. That's why we need to keep an eye on these lows. So if you'll take a look at the hourly chart, that's the retracement that we have talked about. You can see that it even hasn't quite reached the confidence support. So it will be 50% retracement from these lows to this top, ABC reaction right to the 50% support, and market turns to the upward action. So now you need to keep an eye on what will happen. So if market will break this area and will hold above it, this will be indication for further upward continuation. But if market will show some kind of the washroom regions here and then return right back down very fast, and later will taken out of these lows, so if market will move below these lows, it will be the sign that the deeper retracement will be probably right back to the, as I said, 1580 in an area of the weekly pivot support one and in the previous lows of our potential large hand shoulders pattern. That's 2 moments to watch for. But appearing of the grabbers, guys, it's a really good sign for the bullish development of the situation, because grabbers, guys, stands in agreement with the overall price action that has been formed within the previous couple of weeks. So hardly market just occasionally starts to form this construction, this failure action of based on the hand shoulders. So forming some kind of the not logical behavior from the standpoint of the hand shoulders. That's why grabber stands right now in agreement with this preparation for some different action. That's why I think that the grabbers have and the bullish perspective looks a bit more probable in the current situation rather than some dropping and this great hand shoulders pattern. So, but we will see. Just keep an eye on it because this is most important moment in this scenario. So probably it will be resolved today.